What's going on, everybody? Welcome back to another pre-week market analysis video here with Corey Smith with CoreFX, coming to you guys live through T3 Live YouTube page. I appreciate you guys taking the time to watch these videos and stay tuned every week as I make them. If this is your first time watching this, basically I give a quick rundown of each individual currency on the technical charts, how they did last week, what they're looking like starting this week. I go over the news last week, everything that happened that was worth noting, everything of importance, and then I go over this week ahead, what's going on in the news, what to look out for, what to trade around or not trade around, depending on your style of trading, and really just what to be aware of in the FX markets and the equity markets and other things that are of importance to us. I go over the top performing and underperforming currencies and give you guys a basically one-stop shop place to go to see your video for the week ahead to get an idea of what is going on in the currency world. I do these videos here through T3 Live every week. I also have my own Instagram website and training program, corefxtrading.com, if you want to check it out. Make sure you check out T3 Live's content too. They got some awesome stuff here on YouTube as well as in the educational side of trading. Like and subscribe to this page, and hopefully you guys enjoy these videos. It is the 4th of February 2018. It is actually Super Bowl Sunday here in the United States. I'm looking at my Eagles and Patriots balloons I've got for the Super Bowl party I'm having some people over. A strong little side note, in case anybody's wondering, I'm a Giants fan, and you know, we've beaten the Patriots twice in the Super Bowl. I don't really have anything against the Patriots. Got a lot of family from up in New England. I grew up in New Jersey, surrounded by Eagles fans. All my friends are Eagles fans. Most of them are obnoxious. If they win this Super Bowl, I'll never hear the end of it. So I'm all aboard the Patriots train this year. And I'm sorry, any of you guys that are Eagles fans out there. I still love you, but I really hope the Birds lose today. Off with the side note. I hope everybody enjoys Super Bowl Sunday. Unfortunately, tomorrow, Monday the 5th, isn't a national holiday yet, but I've been hearing a lot of talks of it. Alright, so I'm going to go ahead and jump into last week, what we got going on here in the FX world. So we had the Swiss franc, the euro, and the dollar as the top performers last week, and we had the Aussie, yen, CAD, and New Zealand as the bottom 3 performers. That is really funky because we had the biggest sell-off in equities this week that we've had in 2 years since Brexit, the worst week. And usually when that happens, there is a risk aversion move, and money goes into the yen, money goes into the franc, money goes into the dollar. As you can see, the franc and the dollar were on par. The yen got crushed. Aussie was weak and CAD was weak, which is normal, but normally there'd be a lot stronger of a move. The franc would be a lot stronger, the yen would be a lot stronger, the dollar would be a lot stronger because people are panicking. They're taking their money out of riskier assets, putting them into safer things like these currencies. And that just didn't really happen this week. We didn't really see the risk aversion move into the Forex markets. But I'm going to be looking for that to happen this week because I do believe it's still on the table. So I'm going to be looking for a strong yen this week. I'll show you the chart in a minute too. It's coming to a nice support. So I think we could get a bounce from the yen. Swiss franc has been ripping higher, so that most likely going to continue. But I'm going to go ahead and switch it over to the charts here for you guys. Starting with the US dollar, we saw this head and shoulders pattern, bounced off this trend line, and then we saw it just fall like a rock for the past few weeks since then. We did hit this support. If we switch it to the weekly chart here, you guys can see this is a very strong level. If you look back at the historical data, and it's back here. And we are now at this level, and the weekly closed with a spinning top. So that is an indecision candle. That shows that there was a balance between buyers and sellers and kind of an indecision. No one really won. But that can be a reversal sign. So we have an indecisive candle on a strong support after a strong downfall. We could see a bounce and a rally from the dollar this week. We have a bullish engulfing candle off this support, which is another sign that there could be a rally. There could be some bullish movement. I don't think the dollar will quite rally back up to this strong support at around 91 to 91.50 range before continuing lower. It is on the table, but I think we'll get a rally back up to about 90.50 maybe, and then continue the downtrend. I do think there's still more downside to come from the dollar, but we just need a rally to correct some of this downfall it's been having. Euro is another one. Not much has changed. We're still in this uptrend, still setting higher highs. I'm still waiting on a little bit of a higher low to be set, a pullback before I'm really on the board to go back long with the euro. But we've just been in this high basing pattern, moving sideways, bouncing around in this range. So nothing really changed in the euro. We've still got the same outlook. I'm still looking for a retracement before going long. Yen had a strong sell-off this week. As you can see, we are all the way up to here, hit this resistance. As like I showed you guys, we're in this big range here. Hit that resistance, sold off, and we are now back down to this support level at around 86.70, I guess you could call it here. We did hit this and bounce a little bit. I think we're going to see more of a risk-off move this week in the FX markets. I think we're going to get a bounce from the yen. So we'll have to wait and see. But either way, this had a nice correction this week in a strong upward move. So we got about half of the move corrected, a little less. So I think we're ready to now move back higher again with the yen. British pound, just like the euro chart, broke above this very strong resistance in an uptrend, setting higher highs and higher lows. And we have now range bound between the support and resistance here. We're moving sideways, so we got to wait for a break either way. I would like to get back into the long pound down here at 136 on this weekly support if we pull back to test that. But it could break this 139 level and just continue higher. We'll have to wait and see. CAD, we did get a nice pullback this week. I liked seeing this retest here. I like where it's at, even though this is a pretty strong bearish candle. And the week last week, I do think that we're at a strong level here. I like the CAD fundamentally on the long side. We got CAD, big news from CAD this week, so I do think the CAD has the potential to bounce here off support and pull back up to the 8150 range that I told you guys I think we see CAD hitting here in the near future. Swiss franc, we saw this huge, powerful rip higher. It did continue to push higher this week, pulled back a little bit. The risk-on moves could see this continue to move higher. It is very overextended as far as a mean reversion type of situation looks. We do need some correction. The moving averages do need to catch up here, whether we move sideways and base above this resistance that we broke, or if we do get a pullback. Either way, I'm not going to be chasing this to the upside after that explosive of a move. Yes, there's momentum. Yes, it's an uptrend. Yes, we want to be looking to buy. But we want to be looking to buy at more ideal opportunities, and that would be when we get a correction in price and more of a cheap wholesale price rather than paying these expensive retail prices up here, chasing the trend. Aussie, another one. We had a very explosive move after we broke this downtrend, pushed all the way higher, now hit this weekly resistance, and has sold off of there really hard. We had a strong sell-off. This could be a result of a lot of money leaving the Aussie with these risk-off moves and going to safer assets. So I think that is what's causing this. And I expect it to continue. I think we'll come down to this level here and then bounce higher. I do see some potential more upside for the Aussie, especially with all this bullish momentum we got going. But I think we can see more of a pullback down into this 78 to 79, 50 to 79 range in here. So we'll have to wait and see, but that's where I'm seeing the Aussie go. New Zealand, as you guys saw, we were in this explosive uptrend, hit this strong resistance, and I said we could get a nice correction. We got a correction last week off of the CPI numbers that missed. Then we rallied back up, and then this week we ended Friday with the strong sell-off we saw in the equity markets. Money left the New Zealand dollar, and I think this could continue. We're above strong support, resistance turn support, so this level could hold, and it could just stay range-bound or continue higher. But fundamentally, I could see the New Zealand dollar pulling back to around the 72 range if we get a continued sell-off in the equity markets and that risk aversion move continues to happen. All right, so that does covering each of the main currencies' technical setups and what the charts look like. Now I'm going to flip over to the news and go over what happened last week and what to look for the week ahead. Starting last week, again, Sunday, we had nothing going on. Monday, not much as well. We had trade balance out of New Zealand that beat expectations. This is, difference between imports and exports, supply and demand for the currency. Business confidence in Australia beat expectations for a 5-month high, the highest reading they've had in 5 months, which is pretty good. And businesses are confident in the future. They're more likely to spend money, hire employees, expand their operations, launch new products, all this stuff that is growth and stimulation to the economy. So this is a leading indicator. Typically when businesses are confident, they act on it, and then in the future it leads to stimulating the economy. Or if they're not confident, they don't act, they sit on their money, they don't hire, they don't expand, stagnation, not expansion in the economy, and we see less growth and that sort of thing. So this is why the confidence reports are important, and we're seeing good numbers out of Australia, which is good. That's what we want to be seeing. This week we do have 3. Oh no, that's next week. Sorry. I'm skipping ahead to next week's meetings. So after that, we had on Tuesday a bunch of small reports. I told you guys, the CPI in Germany missed, Spanish GDP met, preliminary flash GDP in Europe met expectations, so no real change there, nothing really crazy going on. Nothing really too important to watch for. Then we had the US dollar's consumer confidence, strong reading, beating expectations. This is showing that there's still a lot of faith in the economy in the U.S. Hopes are still high. Consumer confidence is still high. This is just like with the business confidence. It is the people of the U.S. are more likely to buy a new house, buy that new car, open that new credit card, start that new business, hire the new employees. All these things which stimulate the economy, get things moving. So we do want to see strong consumer confidence. We've been seeing record-setting consumer confidence for the past year or two, and this is just showing it's continuing to be there. Once this number starts changing, we can start getting worried about when the next recession's coming and downfall, but everything's still good in the economy. Consumers are still confident, so everything's still going to be moving higher. Then the Bank of England Governor Carney spoke, and he had mixed comments about the UK government, saying the household debt is their biggest concern outside, of Brexit. As far as economically, the household debt is pretty high across the UK, which they're concerned about. But their real wage growth has been picking up, and they're expecting to see some real wage growth this year, and inflation stay above their 2% target. So it's going to continue to apply pressure to the Bank of England to hike rates. So this was definitely a little bit more hawkish, but decently mixed. CPI out of Australia missed expectations on both fronts, really. This came out 0.6 as opposed to 0.7. Trimmed came out 0.4 as opposed to 0.5. Australian dollar was choppy at first, and then like I showed you guys, at the end of the week, it did sell off. This had definitely an influence on it, but also the risk-off aversion moves. It was the weakest currency of the week by far. And again, these CPI numbers coupled with the risk-off moves are what did it. Then Tuesday night, Trump had his first State of the Union address. It's a yearly speech the president makes in front of the country about what happened last year, the successes in all the prior year, and what the plan is moving forward for the next year. It was his first State of the Union, so it was a pretty big deal. There was some equity sell-off this week, and the speech I don't think had anything to do with it. I think it was more related to the earnings reports. And basically, we didn't see any impact much on the FX markets, as he just talked about the growth of the U.S. economy, what's happened last year, what he's doing moving forward. So not really much of an impact. We're still seeing that sell-off of the dollar. We got to bounce now, but even with this consumer confidence and all this and that, strong data out of the U.S., we're still seeing continued weakness in the dollar. So that tells me the dollar is going to continue to fall. Even though we're going to get a little short-term bounce, I think overall it'll still continue to fall. Going into Wednesday, we had the flash CPI out of Spain, but that didn't really matter because right after that we had Europe's in general flash CPI. Came in as expected, and Euro saw some strength to the end of the week coming off of it. After that, we had the preliminary NFP numbers. So this is the ADP. This is a private third-party company that releases their estimate on the employment change, which beat expectations. Usually a good cue that the NFP numbers themselves could, and they did. But we'll get to that in a minute. CAD's GDP came out. Came in as expected. Mixed CAD off the report. There's nothing really changes in the look of the Bank of Canada and interest rates. If we saw a beat here like we've seen back in December, that usually has an impact, bullish impact on the CAD, as that shows that their rate hiking cycle is going to continue. A flat number doesn't really show us anything either way, so kind of mixed CAD off of that report. Then the event of the week, US FOMC statement. As expected, they did keep their rates unchanged, 1.25% to 1.5%. It did open the door to a rate hike in March. We do know that the Fed's expecting 3 hikes this year. Strong NFP data on Friday is even more evidence to us that a hike is likely to happen. It was Yellen's last meeting, which is a pretty big deal. It's her last ever meeting of the FOMC. She's done this month, and Powell is going to take over. Jerome Powell, who was voted in as the next acting Fed chair. She didn't really change anything. She didn't want to go out with a bang. Didn't want to mess the waters up or anything for Powell coming in. So not much really was said. Other than, likely rate hikes in March, which is kind of what led to a bullish dollar at the end of the week. They remain data dependent. The Fed does as usual. So all these numbers coming out is what's going to influence their decisions on rate hiking or not. The wage growth, the inflation, the job market, all these things are going to impact it. So we're really going to have to wait for that. The dollar was mixed after. It did move down lower further on Thursday, but then Friday we saw that bounce off support. After that, we had China's manufacturing PMI. Came in as expected. Nothing really there. Thursday, Pound's PMI numbers missed expectations. They also missed construction PMI on Friday. So back-to-back misses. These have been strong numbers. We need to continue to see strong numbers out of the UK. Otherwise, that Brexit can start weighing on the markets a lot more. But not that big of a deal. They just missed the purchasing managers index. The purchasing managers of big companies, how they're feeling about the future of the economy and everything. The manufacturing and the construction sector both missed, but not that big of a deal unless we continue to see misses. Manufacturing PMI out of the U.S. beat expectations, so that's the purchasing managers in the manufacturing sector in the United States feeling optimistic about the future, so that's a good reading. And then Friday we had Spain's unemployment missed expectations. They had more unemployed than they had expected. Not a big deal, but that is one of the biggest countries in the European zone, so definitely something to watch. And then on Friday, we had the non-farm payroll out of the U.S. Very strong reading. Unemployment rate remained 4.1%. Really low unemployment rate. 200,000 jobs created last month, as opposed to 181,000 expected. Either way, this would have been a high number, but 200,000 is a great number. And we actually saw a pickup in wage growth. So our hourly earnings has been a problem for years now, and we're starting to see a pickup, which is a great sign. This is an inflationary reading, and as the central bank is supposed to be in charge of keeping a stable inflation and price control over the currency, this is something they watch very highly. This is why I think the March rate hike is going to happen unless something changes with the data in a negative way big time from here till then. I think it is going to be a hike in March, and these readings right here just help back that up more and more. So we'll definitely have to keep an eye on it, but I think that we are going to see a rate hike. I think we're going to see a short-term rally in the dollar the next week or two, and then I think it'll continue to fall. Maybe when we come closer to March's meeting, we'll start to see that buy the rumor, sell the news type of deal. We'll see the dollar start inflating as they're expecting a rate hike. And then maybe when the hike comes out, the dollar sells off again or continues to get stronger from there. We'll see. I don't know if this support we just hit will be the bottom for the dollar. I think we have further downside, but it could. We'll have to wait and see what all this data tells us fundamentally to see what's going on. So that takes us to this coming up week, beginning on today, February 4th, Sunday. Again, I told you guys I don't typically trade Sundays, especially today. I'm going to be drinking and watching the game, and I'm just staying off the charts. But as you guys see here, we do have Chinese news, their services PMI, not a big deal, but if somebody traded the Australian dollar, New Zealand dollar, that could offer you a decent movement. There's going to be some eyes on that. Usually Sundays, when there's any news events, it's a decent trading opportunity because there's never usually anything going on Sundays. So when there is, all the impulsive traders out there and banks and things that are trying to make earnings off of trading, they get involved when there's an event because there's usually nothing, and now there is something. So there could be some movement, some liquidity, some opportunities. So that could be something, but I won't be trading it. Monday, we've got the Pound Services PMI. This is the service industry's purchasing manager surveys that we know. This is a gauge of the health of the sector and the economy, future leading. We'll have to see how that is. We missed 2 PMIs last week with the pound, so let's see if that trend continues. Then the U.S. dollar, the non-manufacturing PMI, same thing, just excluding the manufacturing industry. So we'll have to wait and see. This was recently added here. Draghi speaking, testifying in front of the European Central Bank's annual report for 2016 before the Parliament. Okay, so this is definitely something to watch. Nothing too crazy, but whenever Draghi's speaking, the euro is at gunpoint to volatility, so we could see some movement out of the euro. Keep an eye on that. Then we have a double whammy here out of Australia. First, we've got retail sales and trade balance. Good trading event for Aussie and New Zealand. Ideally, we want both readings to be in par with each other typically, but this one's going to really get overshadowed by the rate statement right after. But this could offer us an initial opportunity to potentially get into profits and lock in some profits, take some risk off the table going into the RBA, and have a trade set up for that. So that's what I'll be looking to do. If these two numbers are mixed, one beats, one misses, something like that, then typically the Aussie just chops around. But hopefully they both come in on par and we get some kind of decent setup. Then the RBA meets after. 1.5% rate is expected to remain the same. They're not expected to change their rates. This will be the 16th straight meeting with no hike. So they've gone a long time with no hike. The last thing they did was in 2015 or so when they cut their rates lower. Now we're back into a hike cycle for other nations. They haven't joined in yet. We'll have to wait and see. As the RBA has been saying, they understand the global growth going on and the global hike cycles and all going on, but they said their case is different and it depends on what's going on domestically. So they're going to be waiting till their data and their nation picks up before they can change anything. Not much has changed since last meeting. Well, last meeting, nothing changed. They had strong labor market. They needed higher wage growth and inflation in order to start tightening and all that. But since the last meeting, they have had a pretty badly missed GDP reading and a pretty strong beat in jobs report. So we'll have to wait and see. Their unemployment rate, though, did tick higher, even though they had a better than expected report. So mixed data, a little bit more on the bearish side, the dovish side, but not expecting there to be much different rhetoric out of Australia. But anything that they say on their outlook for future hikes possibly being inevitable or changes to their forecasts or inflation readings or any of that is something to watch. So definitely a strong event here. And they have the statement afterwards. So something that we want to be watching. Then into Tuesday, we have CAD's trade balance. This is their imports versus exports, supply and demand of the currency. This is something that we want to keep an eye on. And then at night, we have New Zealand's jobs report. This is their quarterly reading. It's really good. It was a really good reading last quarter. We'll have to see if their strong readings can continue. Maybe we get that bounce higher off that support for New Zealand like we just showed on the chart. Or maybe we get New Zealand selling off further and more of a correction coming year out of New Zealand. We'll have to wait and see for that as well. Wednesday, not really much going on until here. The other big central bank meeting. There's 3 this week. This is the second one, and it is out of New Zealand. They have 8 a year. Their last meeting was November 8th. Sorry, that's what I meant to say. This is the statement and the press conference, so this is a great trading opportunity. Usually, they're not likely to change their rates. The rates are at 1.75%, 1.75%. Kept rates unchanged last time, and they're expected to this time. So the actual rate statement shouldn't be too big of a mover, but the press conference afterwards is usually where a lot of the movement comes. New Zealand's year-over-year inflation reading unexpectedly fell by 0.3% last reading, showing us even more so that they're not likely to hike rates. New Zealand dollar did fall sharply. This could have an impact on the future outlook of the RBNZ. They could be more dovish coming into this meeting. We'll have to wait and see. Employment numbers Tuesday also could be a big influence to this central bank meeting. It's another strong piece of data that I'm sure they'll be talking about. So we'll have to wait and see how this employment number comes out to then see how it could be affecting this. Either way, a lot of data coming out of New Zealand. Definitely going to be a strong week to watch. Then we have China's trade balance after, which also has an impact on the Aussie and New Zealand. So all in all, the Aussie and New Zealand are going to dominate this week as far as trading opportunities. So those are 2 pairs you might want to be watching to trade. Or if you don't like volatility and news events and you like just trading technicals, stay away from those 2 pairs this week. all in all, they're going to be big market movers this week. And then Thursday, we have the other big one, which is going to be Bank of England's rate statement. The last meeting, they voted unanimously to keep rates unchanged. 0 voted to change them. 9 voted to keep them the same. And their rate is at 50%, a half a percentage point, 0.50. After hiking rates in November, this meeting, rates are highly likely to remain unchanged, but we can still expect some volatility around the event for sure. Their inflation sustaining its target is their main concern, so we'll have to see if their inflation stays around target and it remains above 2% target. And the longer it remains above them, the more likely they are to hike rates to try to get that under control. But it's not really moving out of control. It's not at a dangerously high number. It's just slightly above their target, so nothing really too crazy. This still wouldn't, even if they did tighten though, even if they did see inflation starting to run away and they did need to jump on it or anything, it still wouldn't happen until May or August, so we have time. But either way, this meeting is going to cause some volatility. We've got their inflation report, so this is going to be their future outlook on inflation and where they think it's going, as well as their bank monetary policy statement and their rate decision. So this is a big event for the pound, and it's definitely something we want to be paying attention to. If you're in any pound trades going into Thursday, you are definitely going to want to be paying attention to them, managing your risk properly, not letting yourself be exposed to big gaps in price and big slippage, blowing counts and losing bigger than you need to. If you're up in a trade with the pound going into the event and you've got a big cushion, great. Hold into the event. Hope that it turns into a massive winner. Otherwise, I would close out any positions prior to it just because there could be an extreme move. Your stop loss or take profit could get skipped out big time when there's a strong move. When all the orders flood into the market at once, they get filled in the order at which they were put in. And if your order gets put in, you might not be getting filled until millions of Citibank's contracts get filled ahead of you, and the price can be drastically different by the time your order gets filled, causing some serious damage to your account. So be careful around these central bank meetings and such. Outside of that, we have the RBA monetary policy statement. This is going to be the detailed report of the RBA's last rate statement meeting. So this will give us more insight into their view on inflation, the economy, and really what they saw in this meeting. So that's something that we want to watch. China's PPI and CPI. These are the producer price index and consumer price index. These are the inflation readings. This week, the last week since we had the worst week in 2 years, China is a big risk-on, risk-off market. So I think the markets are going to be a little bit more sensitive to this data this week as we see this risk-on, risk-off sentiment changing. Any data related to this risk aversion, I think, could be more impactful on the yen, the dollar, the euro, the Aussie, New Zealand, CAD, all the risk-on and risk-off currencies. So this is definitely an event I will be watching and keep an eye on. Double whammy here with the Aussie if you guys can try to get both of these trades. Pound manufacturing production month over month reading. This is the output produced by the manufacturers in Great Britain. So this is definitely something that we want to be keeping an eye on as a leading indicator of economic health and something that the central banks will be watching and can affect the economy overall. Then we have CAD's unemployment. Doesn't fall on the same day as NFP this week, so it's kind of, I like when it does it this way instead of everything happening in one moment. We've got two different trading events. So CAD's labor market has been extremely strong for a while now. The Bank of Canada is very data dependent, so they're watching this, and a change in this could cause some sell-off in the CAD, but if they continue to see strong readings, I think this Canadian dollar continues to move higher. It's a key data point that the Bank of Canada and traders, investors around the world will be watching, so definitely something to keep an eye on, definitely something to be aware of if you're in any CAD trades going into this event. Same as, like I say, with the Bank of England. If you have a nice profit cushion, you can keep it open and take that risk. If you don't, I would not keep it open. I would not take that risk. I would not risk getting slippage and gaps and blowing your account or losing way more than you had risked and calculated in for. So that pretty much does it for this week's fundamental analysis. I don't do my technical analysis on YouTube for anymore. That's something that I exclusively offer my core FX trading students. So I apologize, but that's just how it's got to be, unfortunately, guys. I take a lot of time and effort into making these videos every week, and I put them out there free of charge, so I hope you guys do enjoy them. Please give me feedback. If there's anything differently you want me to do in them, let me know, and I will try to implement it. Otherwise, have a great Super Bowl Sunday. Anybody that doesn't care about Super Bowl Sunday, have a great Sunday. Enjoy your guys' days. Enjoy your guys' week. I hope you guys have a great trading week this week. I appreciate you taking the time to watch these. Check me out, core.fx on Instagram. Check out my website, CoreFX Trading. Check out T3 Live, their YouTube page, their website, their training courses. Great content. Appreciate it, guys. Thank you very much, and I'll catch you next week.